So with the approval of Bitcoin ETFs, they haven't been too hot. We did kind of add them to the portfolio, ended up taking about a $300 loss, and it seems like it has kind of continued downward slope since then. So what is happening essentially with the Bitcoin ETFs? And before we get into the portfolio for this week, they have seen, and a lot of people are really pulling money out of Bitcoin to buy the ETFs. The ETFs are holding the Bitcoins, and we've also seen a lot of miners that again mine Bitcoin. Bitcoin again selling off quite a bit of Bitcoin to go ahead and move into these ETFs. Now, something to remember and to keep in mind, and what a lot of people have been kind of sharing with me within the crypto community, is not only owning Bitcoin in a self-custody wallet, you really don't own the Bitcoin. So majority of the ETFs are actually carrying all of their Bitcoin through Coinbase. So Coinbase is actually owning the Bitcoin. The ETFs themselves don't own the Bitcoin. I know it can be a little bit confusing on who actually owns it, but in addition to that is when Bitcoin kind of fluctuates up and down with the ETFs that are tied to it, when you add on the fees that are associated with these, and some of them are very minimal, some of them are very, very high. I mean, we're talking north of 1.5% for a Bitcoin ETF. Now, we're going to have to see exactly where the future of this is. A lot of people getting in very early. Now, the big thing, of course, with financial institutions owning that Bitcoin ETF is they're going to have the ability to actually put portfolio investment or retirement funds into those portfolios, which again, we're going to have to see exactly where that is going to land. So this week we're getting into our $1,000 journey and we are $12,000 in. So we're going to be hopping over to M1. Want to show you exactly what we're looking at and how well we're really doing, guys. It's doing incredibly well right now. So this is our debt-free journey. If you join me, we were at about about 70, probably roughly around 70 when we started this. Our goal is to put $1,000 in every single week. You can see the buy rate here. Current cash is 1,000 current cash. So that means Monday morning, and today is actually Saturday night. So Monday morning, we're going to doing our purchase for the portfolio, which I want to run through again. So right now we are running through 87,802, so almost $90,000 in this portfolio. Now our goal is 100,000 invested. It is not the current value. I know the value overall is going to be north of that 100,000 milestone that we're looking to get, but overall we want to make sure that we're putting 100,000 in this portfolio. Then we're going to reevaluate it and see exactly where it goes. Now this portfolio itself is 2 years old, guys. We have been pumping a ton of money in here. And the way that I'm allowed to do that, or I can do that, is the debt-free journey. So overall, we cut a ton of expenses. We're actually the only debt literally that we have at all is our house, which we're paying down at an exponential rate. The rest of it, every single penny, everything that is going into here, short of that emergency fund, is going into the debt-free journey. And overall, we're almost at a 51% return. That is right, guys. We are now north of 50%, which is kind of crazy for the return. Now, 2 weeks ago, we did rebalance this portfolio. Now, the rebalancing of the portfolio through M1 Finance, through Pies, which there is a link down below if you want to invest, especially those Roth IRAs, they can give you an incentive. And the referral bonus is already down there, so I do get that as well. So a big thank you to you guys. But overall, when you look at M1 Finance, it does a rebalance. You can do it kind of manually, or you can do it by the buys. So if we look at our upcoming trades, we'll go ahead and view the details. You can see QQQM is at 334, while the VOO is at 171. This is how it allocates when it comes to those pies or when it comes to your portfolio itself. So it's going to buy a lot more of QQQM because it hasn't performed as well as the VOO and the SCHD, meaning that we are going to put money into that specific portfolio. So it does break it into percentages like we have seen before. So 25, 25, 24.9, 24.9, which is the reason right there why the VUG and the QQQM is getting allocated more funds, because overall they are a little below target. So that will actually bring them up, and it should bring them all up to that even 25 mark. Now, again, if you remember, I believe 2 weeks ago, we did put a little bit into that Bitcoin ETF. It invested, held it for a day, got rid of it, took about a $200 loss, I think a little over $200 loss. And then, of course, we sold it pretty quickly. I was cautious getting into it, not owning the Bitcoin. And I think, honestly, if you're looking to get into Bitcoin or cryptocurrency, just buying the cryptocurrency yourself is really the way that I would recommend doing it. Now, looking here, we are still holding the VOO, which has an $11,000 gain. Now, of course, Warren Buffett, a lot of the greats have always said invest in the VOO. If you only invest in the VOO, over the last 15 years, we have seen a 13.8% return with the VOO, When you break it down, inflation, I believe it was still about 11.2, maybe 11.5 return that you were getting out of the VOO on an annual basis um, over the past 15 years. So that was kind of the average over that past 15 years. Now, the SCHD, we do keep this one because this is our big dividend stock. Now, I know a lot of people hate it, a lot of people love it, a lot of people must have it in the portfolio. Regardless, guys, the SCHD has performed incredibly well. It got to a point where a lot of people were saying that it was undervalued or it was oversold. We picked up quite a bit. As you can see, we're up 8% so far. In addition, the dividends are going and reinvesting into this entire portfolio, which we've made just north of $1,000 right here with this investment portfolio. The VUG, you can see $2,300, 54%. It is up right now. QQQM 17.64. So overall doing incredibly well. Now remember, if you've seen this portfolio before, the Vanguard S&P 500 for about a year, all of 2022, we only carried the S&P 500. That was literally the only fund that we had. So we had been really stocking that up. That's why we've seen such a high gain in return. And we also do this through dollar cost averaging. Most of you know this is a great way to invest, not lump sum investing where you throw, you got $20,000, you throw $20,000 into the market. You're kind of rolling the dice at that point with it going up and going down. For a majority of people, if the market does go down after you do a lump sum investment, they will quickly pull the money all out of the stock market, realizing the loss, and then, of course, never going back in the stock market or vowing not to do it again because they lost money. Now, overall, when it comes to this portfolio, net cash flow is 75.1 or 75.9, so almost 76,000, which means we still have 24,000 to put in here. I want to get this net cash flow right here. So our contributions up to that $100,000 mark, and we will hit that this year. And you can see September 26th of 21 is when this actually portfolio started. A couple days later, due to the funding, the verification, all of that stuff when it comes to portfolio. But overall, since we've started tracking this on this channel, it has been doing incredibly well. And Monday morning, of course, is going to add another 1,000, taking us to the 88.8 or almost probably to the 89, depending on how the market performs on Monday. Now, historically, looking at data, most people have said buying on a Monday. That way the market has time to digest the weekend news. So we do our buys every single Monday. So we put $1,000 in there, which is really cool. Now looking at our portfolio in its entirety and kind of the time aspect. So we started tracking this and really recording it with the $1,000 we deposited on 11/13. So 11/13 to 12/13 to 1/13. So we've had 3 months of growth in here going from 1,000 to 12,000 is where we're at. But when you look at the return, and this is why I wanted to track it, guys, is we started at a 22% return, 29, 31, went through the 30s right there, went through the 40s right here. Now we've broken into the 50s. Now, historically, looking at an election year, looking at the economy, even all of the data that we've been receiving has said that the economy is very, very strong. And overall, the performance that is coming this year should be exceptional. I mean, barring anything like COVID happening or, something massive of that nature. But overall, this year should be very successful when it comes to the stock market and when it comes to investment portfolios overall. Now we know 2022 was very difficult. 23 was an exceptional year as well. So if we do 23 and 24 for very solid years, this 50% could go through the 50s pretty quick, getting up to the 60s and the 70% return. Now, net cash flow, this is kind of based on when those investments come in. And I did highlight the 15 because this was our rebalancing. So this is when we actually rebalance to allocate that new Bitcoin ETF in there. Dividends, of course, going up little by little, but the balance going from 69 to 87.8. Pretty good increase right there. And even looking over the past, 3 months, we've had 2 down weeks in their entirety. And here we go. So right there is the GBTC, which was our ETF. We lost $238 in there. So that's okay. We will definitely take that loss because overall, looking where we were at almost 11 to 11.42 to 917, the QQQM has really been taking off. 16 here to 23, 300 to 500 for the SCHD. Now, all of these numbers, if you remember, this is the value. So I'm not actually tracking the percentages in here, but this is the value increase. So we're tracking it week over week. And even looking at the beginning, I mean, the SCHD, our value in there that we had gained over what we purchased was 161. Now it's at 530. And again, 14 to 23, 50 to 917 for the QQQM. So overall, this has been pretty solid growth and pretty solid performance with the amount that we have gained. And then of course the VOO from 49 to 11.4, guys, kind of incredible with how this journey is going. And of course, we're going to try to do this up to that 100,000 mark, which was essentially be another 23 weeks. But I do want to see if we can run this on its entirety and through its entirety during all of 2024, meaning 52 solid weeks to go through there and track this and see exactly where we are with 52K invested. Definitely trying to get there because retirement goals are around the corner. I mean, we're about 6 years away right now. So if I can keep up this pace of the investment strategy, making sure that we're continuing debt-free, making sure that keeping all of those expenses low is going to make a really, really big difference on exactly where this portfolio lands. But overall, guys, we only do 4 ETFs. And me personally, this is my personal preference. I only invest in ETFs. Even looking at my 401k plan, which is not included here, this is just a standard brokerage account. But even looking at, again, my 401k, then I look at the money that I'm carrying in my HSA account, which is invested through health equity. I am also in ETFs in that avenue as well. And then the individual brokerage account, the exact same. I am only in ETFs. I do not purchase individual stocks. I really stick to it because if there's an issue with one single company or if something happens with one single company, you can see a really, really negative price margin or a negative sell-off if something happens where I want to minimize or mitigate really my risk. So overall, making sure that I have a diverse portfolio like we do here. I know there is some overlap between the ETFs, but I am okay with that. Sorry, guys. So that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.